Welcome back, folks. It's 16 minutes past 6 o'clock, and we're joined on set by Mr. Jerry Brooks, the chairman of the NGC Group of Companies, and Dominic Rampersad, the president of PPGPL. They are here to tell us more about the additional public offering of Class B shares in TTNGL and what that means for the future of Phoenix Park Gas Processors Limited. Gentlemen, welcome to Morning Edition. Great to have you here.
Thank you very much.
Good morning, sir.
Good morning, Trinidad and Tobago.
Good morning, everyone.
Well, Mr. Brooks, let's start talking about what's happening in the energy sector. And as chairman of the NGC Group of Companies, recently you would have signed an historic agreement with BPTT. Could you tell us a bit about that?
Sure. We are very encouraged by what's happening in the energy sector. A number of things have happened over the last 16 to 17 months. One is that we would have signed the truck agreement. That is the Trinidad Regional Onshore Compression Agreement. That is with BP, Atlantic, and multilateral parties. That gives us about 200 million more scuffs of gas and 100 million scuffs to the domestic. As you know, we have a gas curtailment situation, which is a situation which we inherited and which we're trying to resolve and extinguish as quickly as possible. So 200 million scuffs adds to that residue of production. The shortfall is 4.2 BCF versus 3.3, which is the actual production today, so you're dealing with about 800 million scuffs of gas. We then were able, as a group, to work with BP on the Juniper platform. The Juniper platform provides 590 million scuffs of gas. That comes on stream in about 10 weeks' time in September of 2017. I'm very proud of our team at the National Energy Corporation because they did work on the heavy lift platform and all of the work to support the BP effort. That adds 590 plus 200. Our team at the NGC and the ministry and the task force worked extremely closely with BP. And what's instructive and what's historic about the BP agreement is the fact that we had to recalibrate the entire agreement. Remember, these agreements were over 20, 25 years ago at a time when the gas architecture was very different. And so we worked assiduously to try to change the construct of the agreement and to try to change the framework of the agreement. And we were able to sign that. We've executed that. The Prime Minister was also extremely helpful in that regard. We share the same philosophy in terms of how do we want to use gas to develop our country and the gas value chain, and so that's encouraging.
One of the things that the multinationals have complained about over the recent years is the whole question of risk allocation across the value chain. I'm assuming that this new agreement that was signed with BP would have had some adjustment to pricing issues?
There would have been a change in the pricing methodology, and there would have been a change in several other provisions as well. It's important that we do not confine the conversation purely to a BP conversation, because a lot is happening across the value chain. We have seen a small company called Perenco, which is an extremely good, agile company, similarly to the type of company that an EOG is, coming to the jurisdiction in 2016, and so we're very hopeful in the area of the small and marginal pools. In the area of smaller marginal pools, which is an important area for the country. And remember, Hayden, Trinidad and Tobago doesn't have a proven reserve problem. We have between 28 to 40 TCF of gas. You have Laurel and Manatee with 10 TCF, you have the Dragon Fields, and then you have within the Trinidad and Tobago jurisdiction. And what the BP find tells us is that the Columbus Basin is still a very attractive basin, what with new seismic, ocean bottom technology, and new ways of looking at our resources. Not to underestimate, Shell as well reacquired Chevron, and Shell also acquired Repsol. And what Shell is saying, a $55 billion organization, they are saying that Trinidad and Tobago is important to our portfolio. But this morning, Hayden, I just wanted to share with viewers a lot of what's happening with TTNGL, because that's also a very good story.
Yes, and it's a story that we want to get to in a short while. But there's one other thing I wanted, since we have you here, you're not here very often, Mr. Brooks, so I'm glad that you're here today. One other thing I wanted you to address, are you happy that we are now a competitive jurisdiction for increased exploration, whether in deep water or even shallow waters?
I am happy that we have had these finds, because if you take a look at our energy sector, the contribution has moved from about 20 billion down to about 4 billion. And that's had a substantial impact, one, on our fiscal balance, and two, in terms of our GDP growth. We are one of those countries post-2008 that really has not recovered and that has not grown consistently. Our 2016 growth is 2.3% negative GDP. And it's important that we get the country back onto a growth path. So I am very encouraged by the activities of Shell. I am very encouraged by that Savannah Macadamia find from BP, 2 TCF. We have a long way to go, but it's important that, one, that the country become productive. Two, it's important that we focus on competitiveness. And that competitiveness is across the value chain in terms of how our service providers operate. And an interesting story at the NGC and at Phoenix Park is that we have taken $163 million in expenses out of our business. Competitive, this also means how we do business, the ease of doing business, and it also speaks to how we construct our offerings as Trinidad and Tobago. The Prime Minister recently went to Chile, and if you take a look at Chile, we export 43 cargoes a year to Chile through our various Atlantic arms. The Panama Canal has just opened up, and what that means is that Cheniere now with 5 trains has the ability to push in more vessels into Panama. Remember, we were the largest exporter into the US. Then we switched to Asia, then we moved more to the Chilean location. So we have to work on our competitiveness. And that includes taking a look, one, at the industrial court and how we revamp that legislation. Two, it requires how we take a look at procurement. Three, how do we work not only within companies but across companies across the space. And then fourthly, how do we reconstruct our package of fiscal incentives in a way that's compelling, because money is going to go to the location where it gets its best return.
Yes, and I appreciate that you've identified those strategic issues in terms of building that enabling environment. Mr. Ramazan, let me ask you to kick off the discussion there on TTNGL and this APO. It's a very important strategic move by TTNGL. Why exactly are you issuing these additional shares?
Well, the issue of these additional shares was really triggered by the Minister of Finance in his budget presentation for 2016-2017. in which he outlined the intention of the government through the NGC to issue these additional shares to the public. As with any share offering, Hayden, there are many dimensions. Of course, one of the main reasons is to help fund some of government expenditure for this fiscal period. The other is to allow the population of Trinidad and Tobago, individuals, corporates, credit unions, mutual funds, the NIBs, to participate in what we consider to be a very, very good performing asset, an asset that has performed exceptionally well on the Trinidad stock market since the IPO in September of 2015. Any investor like myself who was an investor in TTNGL during the IPO would have so far recovered 25.4% of their initial investment. And that is by far and away the highest return of any company on the Trinidad stock
So
exchange.
would you consider this to be a growth stock or a dividend stock?
I would consider it to be both. The stock has grown since yesterday it was trading at $21. It has traded in a band between $20 and $25 over its period. So certainly there's the potential for capital gains. And since in 2016, TTNGL was also the highest dividend yielding stock on the Trinidad Stock Exchange, paying out 7.14%. As at the end of March, we paid out up to 6.98%. So, and that is way above all of the other categories, banking, manufacturing. So it is both a dividend stock as well as a stock for capital gain. And it is a stock that also, because it's an energy stock and it's the only energy stock on the stock exchange, it's a good addition to anyone who is creating a portfolio. Okay? So you have a portfolio of banking, you have a portfolio of manufacturing, and now you have an energy stock that is growing, and the underlying asset, which is Phoenix Park, is also growing, coming out of the situation.
If you were to estimate, well, I mean, given if this subscription, if it's fully subscribed, how much are you intending to raise?
Well, we are issuing around 40.2 million shares at $21 a share, so we're estimating about $845 million, after which there will be some expenses to be deducted.
And in September of 2015, the IPO was in fact oversubscribed.
It was 1.77 times oversubscribed, Hayden. So
You anticipate the same level of success?
Well, we want to ensure that we get the full subscription.
Good.
So we want what we try to do, particularly with the valuation, is to ensure that this is the right valuation, both for the selling company and the buying public.
Yes.
To ensure that is.
Mr. Brooks, Phoenix Park Gas Processors Limited, producers of butane, propane, natural gas liquids.
Correct.
Given the current situation in terms of the availability of natural gas, because that's their important feedstock, Is that entity operating at full capacity at this time, or is there significant spare capacity at Phoenix Park?
There is some spare capacity. The plant is operating at about 75% capacity, and that's one of the interesting things and one of the beneficial things about investing in Phoenix Park Gas. Remember, this company is the premier company in terms of propane, butane, natural gasoline in the Caribbean, and has expanded into Central America. With the additional gas coming on stream, what you have there is the capacity to go up to 1.9 BCF, which is the nameplate capacity. Typically, when you have a plant which has nameplate capacity, which is the amount it could produce, there typically is about 10% extra. So we believe that the plant can go actually as far as about 2.1 BCF. What that means is that any extra gas which comes through, all you have is the marginal cost coming through. Yes. We have done a couple of things with the company. One is that we are very pleased with the training and the maintenance of the plant. The plant's DNA goes back to ConocoPhillips, so that it's very robust engineering. We've had very few safety incidents at the plant. In fact, 3 lost time incidents in 25 years. We have a very strong asset integrity program, and we've also taken $160 million in expenses out of the business. So what we have done is that we have bulletproofed the company as in a low-cost environment. When more gas comes on stream, what we're able to do is to cause that gas to flow straight to profitability. Yes. Additionally, not only in terms of profitability, but we are also seeing richer gas coming through. So it's a double play. It's a play in terms of more gas and also in terms of the quality of gas. And therefore, we've been able in 2017 Q1 to improve our earnings by 88.4%. So you've seen that uptick in earnings, which has allowed us to strengthen our cash buffer in the organization. The organization has $403 million in cash, which means, just to support what Dominic said in terms of the dividend yield, 7.14% is the highest dividend yield on the local stock exchange. And what that allows us to do is to maintain that cash buffer, allows us to maintain that dividend yield without change for the next 5 years. So if you come into the stock and you make the investment, you have that opportunity.
I mean, that is fantastic news, especially in terms of the 88% increase in earnings. I'm assuming that part of that would have been attributable to the cost savings that you would have engineered within the company.
Very much so. I'm very pleased with the team. For example, in the year of insurance, what we did is that we linked that back to NGC's program, and we used the shared services framework to be able to effect some of those savings. We have not sacrificed maintenance, and we have not compromised on safety. But we have looked at procurement, we have looked at business flow, we have looked at other processes to say, how can we drive savings in this organization to really make it a lean, agile operator which is fit for purpose, but which can benefit from an inflow in terms of gas, and where once quality improves, it goes to the bottom line.
Do you think we can do the same thing at Petrotrin? Don't answer that question just yet. Mr. Rampersad, Mr. Rampersad, just help me understand.
He's not going to answer that question.
You're sure you want to answer that?
Eco-petrol is an interesting model of a country that has done it. And I think once you have the will, it can be done. And once you have the cooperation of all of the stakeholders. So
all right. I mean that's a positive outlook in terms of what we can do with that very important strategic asset. Mr. Rampersad, in terms of the markets for PPGL's output, butane, propane, natural gas, liquids, which markets are showing the greatest promise now in this global environment?
Well, given the Trinidad's geographic location, our primary markets are those of the Eastern Caribbean: Barbados, Grenada, Antigua, St. Lucia, St. Vincent. Those are very small cargo markets, and therefore ideally suited for our size business. So in a lot of ways, Hayden, Phoenix Park Gas Processors is what you would call a niche player. We don't go out there and compete with the huge producers of natural gas liquids. We have our niche markets, and therefore the Eastern Caribbean, Western Caribbean, some of the Central American markets are also very important to us because of our geographic location. There are some freight advantages, and therefore we're able to get a higher net back price than if we were to go further out as well.
Yes. Are you concerned about competition coming out to the U.S. Shale gas industry? And of course, you know, President Trump has a particular view in terms of environmental protection, so there seems to be a massive policy shift in terms of exploration activity in that continent. So do you see that as a critical competitor?
Of course. The United States is not only a large producer of natural gas liquids, they're also becoming a lower and lower cost producer as well.
That's right.
And so it gets back to the point that Mr. Brooks was speaking of. We recognized this threat 5 years ago. and started taking measures such as securing some of our markets on longer-term contracts, but also managing our costs. Every producer of natural gas liquids, in fact, every commodity producer in the world today is competing on cost. And so at the NGC Group and at Phoenix Park, we recognize that, and in 2014, 2015, into 2016, and continuing into 2017, costs continue to be a key focus,
Yes.
as well as customer service.
Yes.
You cannot underestimate the value of the loyalty of your customers to you. And once you provide a service that is competitive or even better than your competition, it creates an environment where the customers want to come to you,
Yes.
to get product. And that is how we've managed.
Yes,
Now,
Mr.
in
Brooks.
the Phoenix Park and the NGC is not staying still. So you asked Dominic the question, are you a growth stock or are you a dividend stock? One of the things that we're also doing is that we're looking carefully at other jurisdictions from an NGC perspective and also from a Phoenix Park perspective and seeing, are there opportunities, given the cash base of the organization, for us to expand our footprint and for us to leverage synergies? So one of the things that we're doing as we speak now is that we are taking a look at a potential acquisition, which will strengthen our geographic footprint, which will reduce volatility in the value chain, but which will also give us a competitive advantage.
So when you talk about the potential for an acquisition, you're talking an acquisition overseas, or?
This is out of the jurisdiction, because increasingly both at the NGC level, and let me speak specifically to Phoenix Park, one of the things that we have to do is that we cannot simply continue to be a Trinidad and Tobago player. It's important, if you take a look at all of the major integrated companies, there are platforms in several different jurisdictions.
Yes.
What that does is that it enriches your earnings stream, and it also prevents volatility. We are also taking a look at, for example, things like how do we increase our commodity trading desk, which is from a marketing standpoint, getting far more multiples in terms of revenue, far more earnings out of what we sell, inclusive of third-party cargoes.
Yes.
On the NGC side, we did that, and we did that quite handsomely, and we were able to increase our revenue 4 times. Dominic is also doing that. We have a very good team at Phoenix Park, so we're taking a look at acquisition opportunities, we're taking a look at expansion opportunities. Interestingly, in the U.S., a lot of the gas coming out of the U.S. is dry gas, which means that we have an advantage here from a fractionation standpoint, as we do in terms of freight and other shipping arrangements. But we are not going to rest on our laurels. We're going to be continuously trying to ferret out opportunity.
And I think that's the critical thing. I think that's what the potential shareholders will want to know, that there is the potential for growth in this company. But Mr. Rampersad, let me ask you the hard question. When you look at the long term, and we're talking 20 years from now, 15, 20 years from now, the evolution of the non-renewable energy industry, the move towards electric vehicles, the move towards self-driving vehicles, and the expansion of the use of solar energy and so on across the globe, what are your thoughts in terms of the future prospects for our energy sector?
Well, the answer to that question really resides in the markets to which our products go to. So if you were to take Phoenix Park as an example, our product, primarily propane and butane, is used in the Caribbean islands for cooking. It's not used for transportation or necessarily for power generation. And that market will always exist. In fact, a lot of the markets in which our product goes to are tourist markets. And of course, tourists go to these islands and they eat a lot.
Yeah.
So these islands depend on that product. So notwithstanding the evolution of solar, the evolution of some clean burning fuels, we think that, and we certainly believe that given the outlook for our markets, the demand for the products for cooking will continue to exist. And what we're also seeing here is an interesting trend in the Caribbean, where a lot of countries are converting their power generation facilities from diesel fuel to propane.
Yes.
So that represents a growth opportunity as well. Countries like Puerto Rico, the Bahamas, St. Croix, U.S. Virgin Islands are all moving in that direction. Jamaica has moved in that direction with LNG. And so the trend is yes, renewables will come along, but there'll always be a core market and a niche market for commodity products like propane, butane, natural gasoline.
It's an interesting conversation,
Yes.
especially when you start looking at the long-term issues. But Mr. Brooks, let's talk about the mechanics of the APU in terms of to whom can people apply for shares, etc. Who are the brokers that people can immediately reach out to? as they see this as a very profitable investment? Who are some of the players that they can speak with?
Okay, thank you very much for the question. In terms of the allocation formula, 60% of the shares are allocated to individuals. And I think you're guaranteed shares up to $2,000. That was done deliberately to widen and deepen the stock exchange, but to also allow individuals to be able to take up their shares, so up to 2,000.
Right.
My sense is that there's very strong interest by the institutional investors, by the pension plan holders, and also by individuals. The second bucket is the mutual funds bucket. That's the mutual funds, the UTC, pensions and trust companies. Sorry, mutual funds and the UTC, that's 10%.
Okay, that's okay.
The pensions and trust funds bucket, credit unions, we also spoke to credit unions. That bucket is 15%, along with cooperatives.
Right.
The NIB and other similar placed institutions is 10%, and then other companies is 5%. The bucket cascades.
Right.
The offering opened on the 5th of June, which is yesterday, and closes on the 28th of June. We have followed the highest traditions of governance in terms of managing the share.
But
we had an excellent opening on the last occasion, this October of 2015, and we intend to follow exactly the same process. Our legal advisors are Johnson Camacho Singh. Our lead broker is Republic Securities. Other brokers are First Citizens Brokerage, GMMB Securities, Boss Brokers Limited. In fact, Mr. Ramkilawan was on CNC3 tomorrow and has consistently recommended the share as a buy, following careful evaluation of the share. Caribbean Stockbrokers, West Indies Stockbrokers, and then you have a host of other brokers, Answer Merchant Bank, Shepherd Securities, etc.
Yes.
You can visit our website online, ngl.co.tt. It is a share that I would commend to people because you're dealing with 11,000 shareholders. You have just about 150 million shares in issue, so it's not that large. But it's large enough to create an excellent market. And remember, this share is outperforming the Trinidad and Tobago Stock Index.
Sure.
If you take a look at the stock index for 2017, Jan 1 to today, the stock exchange has declined 2.3%. That's the old Trinidad, and the composite is 1%. This share has appreciated. And as Dominic said, the share's performance is exemplary when compared to the manufacturing sector, the conglomerate sector, and the banking sector, which has circa 4.1%. So I would commend the share very highly. And the other point I think I need to make is that the shareholders overwhelmingly said to us, we would like you to pay your dividends in US dollars. We earn at Phoenix Park and at TTNGL all of our earnings in US dollars. That has given us a 4.5% appreciation just in terms of currency translation.
Yes.
But what it also means to individuals is as soon as we finalize the mechanics with the TTSE and the SEC, there is the potential to pay the dividends in US dollars. That will move the dividend yield from 7.14% to close to 12% based on the exchange rate that one uses. So it's a share that I would commend. At $21, it's fairly priced.
Yes.
In fact, if you take a look at the average price since the IPO, it's $21.79.
Good.
And if you take a look at the price from January 1 to today, it's close to $22, $21.99.
So there's that room for capital appreciation.
There is that room for capital appreciation. And that's even outside of the growth initiatives of Phoenix Park and the fact that prices have improved 42% year on year. That is from Jan 1 to today. The prices that we looked at last year, prices have improved 42%. So you have several drivers in there, which we think portend well for the share and make it a very, very attractive stock for your portfolio, whether as an individual or as an institutional investor.
Thank you so much, Mr. Brooks.
It's my pleasure.
Thank you so much, Mr. Ramprasad. And I certainly do hope that you have an excellent APO with regard to TTNGL. Folks, make sure and get a copy of the prospectus. Go to the TTNGL website and have a look at it, and certainly consider it as part of your portfolio. We're going to take a break, folks. We've got to discuss what's happening with the High Court and this High Court, this matter that was raised last night, and how it's going to affect the appointment of judges to the bench. We'll be back.